Every opinion in this video is just that, an opinion. I don't have any special knowledge, I'm just some crazy person on the internet. There is a pleasure in being mad, which none but madmen know.
Michael Saylor says that Ethereum shouldn't be treated like a commodity. MicroStrategy's CEO said Ethereum's continued upgrades and forks make it a security. Now, Saylor has said before that the majority of cryptocurrencies should be treated like stocks and bonds, while Bitcoin should be treated like a commodity, such as gold and oil. SEC Chair Gary Gensler actually said the same thing back in June, but a bill in Congress right now would treat most cryptocurrencies like commodities.
The philosophy surrounding the Bitcoin community is a libertarian store of value outside of central banking and government control, a network with its own monetary policy. Michael Saylor has been one of the largest proponents of Bitcoin and has accused all cryptos that are not Bitcoin as securities. He has used examples of voting to change the code, for example, Ethereum moving from proof of work to proof of stake. The same situation happened on the Bitcoin network. This was the Taproot upgrade.
I mean, one of the fundamental insights in the crypto industry is the fact that you can change it is what makes it a security. So if you look at most of these cryptos where they have hard fork after hard fork after hard fork, the problem with a hard fork is that changing the protocol means that some development team is making a decision. And if you can change the protocol in a material way, you can change the monetary protocol, right? A hard fork can change the issuance pattern or can change the value of something. And so that makes an investment contract under securities law. And that means it passes the Howey test. So what you want is a completely decentralized protocol where nobody can change it, even if they wanted to change it. So fundamentally, the problem with Ethereum is they keep changing it, right? From a securities law point of view, right? And there's a team of people that make recommendations. And if
Bitcoin's code can be changed, either by soft fork or hard fork. A hard fork creates a different network like Bitcoin Cash. But Taproot is an example of the Bitcoin network voting on a proposal, then changing its code. Saylor is influential with regulators, and by labeling all crypto as securities, he is looking for an unfair advantage.
Total altcoins. There's now 20,168. Incredible. For all the talk about scarcity when it comes to cryptocurrencies, clearly nothing is scarce when you have more than 20,000 competitors. In fact, I was watching on CNBC and there was a guy talking about Bitcoin and the problem for Bitcoin being all the competition from these 20,000 altcoins. And what his solution was for the government to step up regulations to rid the market of all these competing cryptocurrencies. He said that this was bad for Bitcoin. To have to compete with all these other cryptocurrencies wasn't fair. And so what he wanted the government to do was intervene and put the other cryptocurrencies out of business to protect Bitcoin from competition. Now, I forget who this guy was. He was a major player when it comes to Bitcoin. He wasn't some minor guy. He was some big shot in the crypto world, basically calling on the government to protect Bitcoin from competition. I mean, how far has the Bitcoin proponents fell from the idea of advocating an alternative? This is freedom. People should have freedom to choose. Yes. Well, they should have freedom to choose any of these 20,000 altcoins if they don't like Bitcoin. To say that the government should get rid of these coins because it's not fair, that they don't have a purpose, they don't really have a mission, that they should be regulated and not Bitcoin.
It's odd to see proponents of Bitcoin have a complete 180 from the philosophies of Bitcoin. In my opinion, crypto's true strength is a medium of exchange, being able to swap assets without counterparty risk. If everything becomes tokenized and has liquidity, what would you use as a store of value? I'm looking forward to the day where artificial intelligence and algorithms are able to manage my assets and protect me against exogenous factors like inflation.
So at its core, what we're seeing is total wildcat banking, total free, unfettered speculation, fraud, and there's a slice of innovation. I was chatting with our good friend Grant Williams about this, and he was actually thinking about writing a similar piece on the topic, which is it's just really this amazing, we're going to go through a flush here. The contagion is amazing. The analogy is sort of what would have happened if the central bankers, if the Fed hadn't bailed out AIG, for example, and stopped the contagion in its tracks. Because we suspect, of course, you would have seen Goldman tip over, and then all of the other big investment banks that suddenly became, regulated banks overnight so that they could get bailed out by the Fed. What survives this is going to be a very interesting potential investment opportunity, I think. I mean, that's totally. There's going to be a complete washout. And who knows where Bitcoin will bottom? Maybe it's 1,000, maybe it's 100, maybe it's 10,000, maybe 20,000 is the bottom, where it's been floating for the past few weeks. I don't know. That's why we don't trade markets. But there will be a bottom. There will be a washout. But there is technical innovation going on in the space. There are a lot of really smart people working in it. And when you have complete capitulation, what survives that is kind of like picking up Amazon after the dot-com bubble,
Right. This washout is part of all transformational technologies like the dot-com bubble or the railroad bubble. It's natural. With this being said, the regulator risk is high, and some may even weaponize the regulators like we have seen with ETHgate or Saylor. But this tech has the capability of removing middlemen. A true economic benefit in a world of high inflation. I have faith that lowering costs will overcome all.
I agree, and we will. Ironically, one of these firms was touting that they were FDIC backed, by the way, which is I believe it's Voyager. And the fine print, of course, is that the accounts where Voyager were handling their cash, that bank was backed by the FDIC, but that doesn't mean that anybody sucked up into the Voyager bankruptcy can rely on the FDIC for a bailout. It's just funny that you should use that phrase, but I agree. And the nice thing about this wildcat sort of free-for-all that we're seeing in the crypto space is we're going to run that experiment. So in 5 years, if the space is orders of magnitude better, cleaner, more efficient, more innovation, changing the world, et cetera, then the thesis will be validated. It is a true raw, as we would say in science, it's a controlled experiment. We're getting it. The variables are controlled, and we're going to see now. Look, the regulators might not allow what survives this to persist. They might stomp on it while it's down, and so it's not like this is totally, free and clear. But for sure, people are taking the L's, as you would say. There's no Uncle Sam coming to bail Goldman Sachs out. Three Arrows hedge fund ghosts people and disappears after claiming to have 10 billion in assets under management. The contagion of that collapse is just rippling through the entire, crypto lending space, which is heavily interconnected with just, DeFi. And but meanwhile, I would say the price of Bitcoin's held up pretty good. all things considered. Yeah. I mean, the type of wipeouts that we're seeing, we'll see. I think we said this on Twitter and we've written about it many times, and it always annoys people when we say it, or a certain subset of the crypto fanatics when we say it, which is, I when you think about what are the milestones of a flush out capitulation, I don't know that a world where Tether is still a thing means that we've gotten to the other side of it. That's the big shoe to drop. And so once sort of Tether is no longer a thing and stablecoins are audited on a regular basis, then I think
the failures in the market will be used as ammunition by regulators to regulate crypto. Stablecoin regulation is at the top of their list. How will they regulate it?
I think the wholesale piece is really interesting. At the end of the day, do you want a central bank issuing a digital currency that they can then control? Do you want direct to retail CBDCs where they can say, oh, we'll send you this money, or you can have access to this money, but we can restrict when and how you use it? That's not going to fly in 99% of the world. But is there value in a central bank issuing wholesale CBDCs to banks who can then in turn leverage a stablecoin off of the back of that? I think that is ultimately where this ends up. How long that's going to take, I don't know. But from just a privacy and just a consumer perspective, I don't know that a direct-to-retail CBDC, there's any appetite for that in most of the world. But I do think the wholesale piece of it, I do think being able to drive monetary policy through this technology and through these protocols, there is value in it. But at the end of the day, I don't think we're going to see direct to retail. I think it's very much going to be focused on wholesale.
He's saying that retail central bank digital currencies are unlikely, a replacement for cash in CBDC form. What is likely, a wholesale central bank digital currencies, where banks use this CBDC as an asset and then issue stable coins or liabilities. This is very similar to the system that we have today. The big banks have a line with the Fed and they get issued reserves, and then they take those reserves and then create credit. Now, this is Bitcoin's chart, and behind it is the US dollar Tether market cap as well as USDC market cap. And you can clearly see that these market caps are closely correlated with Bitcoin's price. So when the central banks start issuing these stable coins, these CBDCs, and stable coins get pushed into the crypto ecosystem, what's going to happen?
It's tightening cycle, and then a new bull market can begin. And it'll take a while for assets such as Bitcoin and other cryptocurrencies, which got so badly bruised in this bear market, to recover. But I think fundamentally, it is still a decent idea because the dependence on the US dollar in general cannot continue. And there is a need for having another currency out there with some transactional need, and also currency which is a bit more stable in value. So therefore, you can't have so much volatility and speculative interest in something which is going to be used for transactions. And so in that way, this entire speculative mania and easy money has done a lot of disservice to the cause of Bitcoin. But I think that 3 to 5 years from now, hopefully this will emerge as a more stable asset. And the best case scenario is the Amazon playbook, which is that like it's a great company that got caught up in the NASDAQ boom in its initial years of emergence, went down a lot, but still came back and, nearly 20 years later as one of the world's top 2 or 3 companies.
The world is in a dollar shortage and correspondent banks are de-risking. Stablecoins and other means of payments through crypto rails are solutions to circumvent some of these obstacles. What is the likelihood that this tech is to be used to benefit the global economy? What other solutions are there? There are many parts of the world like Sri Lanka, Turkey, Egypt that are having a really tough time with food shortages and economic instability. This tech can help aid these countries by moving money to them. As interest rates continue to increase, economic instability will also increase.
First, an international finance watchdog is getting ready to propose new crypto regulations. The Financial Stability Board, or FSB, monitors the global financial system and recommends regulations to support it. Well, the FSB just turned its attention to crypto. The organization said it would recommend new regulations for stablecoins and other cryptocurrencies by October. Now, the FSB can't implement these regulations itself, but the 68 countries and authorities from around the world which make up the FSB can.
The FSB is an international organization that gives guidance on domestic regulations. They are moving forward with a framework for cross-border payments, and this includes crypto assets, CBDC, and other solutions. The guidance will be considered for domestic policy, and from what I've read, it's very pro-innovation, but wants to contain technology to existing regulatory principles. It's important to note that every country outside of the U.S. is having this dollar shortage, and they are part of the FSB.
Theater to watch. I feel like I'm on a Broadway watching an incredible act, and it's since we have no money on the line, personally, it makes it a little easier to watch, observe, enjoy, learn, and try to sort of switch our mental models appropriately as things evolve.
Yeah, it just reminds me of so many interviews I heard with Jim Rogers when he would discuss what happened during the GFC, and he'd say, listen, they should have let him go bust. And then what would have happened is the good actors would have taken over the assets from the bad actors. And like we said earlier, the system gets stronger. And it seems like that's what's going on potentially with this Sam, I'm not sure his last name, gentleman.
Bankman-Fried, yeah.
Yeah, so he would be an example of maybe a good actor. I'm not sure how he made his money, but I guess he's like a billionaire that's taking his billions of dollars and just buying these assets on the cheap. Wow. I don't know how he didn't get caught up in the same system. But
I think that's a story that remains to be told, George. It's he runs FTX, which is an exchange, and on the side also runs Alameda Research, which is this big hedge fund. And there's lots of questions about how he has accumulated the fortune that he has. And as you know, on these exchanges, not making any specific accusations about FTX, but there's an awful lot of front running of customers and there's rug pulls and when you see huge moves in Bitcoin, it's usually sort of getting out all the sort of the stops, and they give people all this leverage. There's a lot. He's the second biggest donor to Joe Biden for a reason. Let's put it that way. I don't know if you knew that, but he was the second largest donor to Joe Biden's election campaign in the last cycle. And,
I didn't know that.
You're not donating as much money as he's donating unless you anticipate the need for some protection. Yeah.
There you go. Well, good point. Fantastic point. So I guess the jury's still out there. But all right. All right. So
Sam Bankman-Fried has been one of the biggest donors of political contributions. This may explain why FTX is the only crypto platform that can legally offer option contracts to their customers. An option contract is a bet. If this asset hits the number, I have the option to buy it regardless of current price. For example, if I buy an option on Bitcoin for $20,000 and tomorrow Bitcoin's price is $100,000, I get to buy the Bitcoin for $20,000 even though its valuation is at $100,000. This is used by the big guys as insurance policies.
Problem, which is that the world has never seen a situation like this where it is so dependent on one currency. The world has had reserve currencies before. Before the US dollar, it was the British pound. Before that, the French currency. Before that, the Spanish, the Portuguese, the Dutch currencies. They were all, for about 100 years or so, used as the main currencies around the world for transacting, the main currencies that people would want to hold as store of value. Eventually there was always something else around the corner to take the place of that reserve currency after about 100 years or so that it had spent at the top, and it began to look very overstretched. In every instance, there was an alternative waiting around the corner. This time, the unusual problem is that we just don't have an alternative. The Chinese economy has emerged as the second largest economy in the world. Its currency should naturally have emerged as a second tier currency to the US dollar and an alternative eventually. But China, because of its unique rise, which is that it's a very closed system, its leaders want to have maximum control over the system, and no one really trusts holding the Chinese currency. That's why China has just not been able to emerge as a financial superpower. China has emerged as an economic superpower, as a military superpower, but just not as a financial superpower. And that's causing a real problem. So I think that the window of opportunity is open for alternatives to emerge, for the likes of Bitcoin to be used as an alternative. It's been used already as a transaction currency in certain pockets. I had some ex-colleagues of mine visiting from Dubai, and they were telling me that, that they're also for property transactions and stuff. Bitcoin is now being used like a lot more, arguably, possibly by the Russians, but still it's, beginning to be used. So I think that we need more legitimacy to come through, as you say, for a transaction basis. But I just think it's going to be a matter of time. But the opportunity, that window exists.
Right. Richard, we're running out of time.
Store of value is somewhat subjective. Crypto utility allows any asset to be used as a payments method, a medium of exchange. These crypto networks are protocols of value, and within the protocol, you can move your valuables as quickly as email. War is the trade of kings. John Dryden. Thanks everyone, I hope you enjoyed the show. If you enjoy content like this, please consider joining my Patreon. where I offer all videos ad-free, weekly Zoom discussions, exclusive content, Discord access, and more.